And I think the worst example I saw was around Prime Super, who were making claims about not investing in tobacco producers for a number of years, only to find that actually they had been investing in tobacco for a number of years, and they just haven't been disclosing it to their shareholders properly.
Welcome to The Greener Way. I'm your host, Michelle Baltazar, Executive Director of Media at FS Sustainability. We are recording on Gadigal land, and we pay our respects to the traditional custodians of country and elders past and present. As we start winding down for the year, we thought we'd ask a share market and sustainability expert about the winners and losers of 2025. Where have we made progress, and where are the setbacks? Adam Verwey, co-founder of ethical investment platform Six, has been at the forefront of the sustainability debate and has been championing the demands of investors and shareholders alike. Adam, thank you for joining us.
Great. Thanks for having me on, Michelle.
Can you believe it? We are now the end of 2025. I know that it's been a busy year for you, and certainly I've read the headlines of the resolutions, the shareholder resolutions that you've been involved in. So let's kick off with that. So what's happened this year? What are the key highlights?
There's been a lot of highlights in Australia, in particular when it comes to shareholder resolutions being proposed to the AGMs of really big companies. This is something that historically hasn't happened very much in Australia. So we only have to look back just a couple of years. In 2023, we actually had a low of just 6 companies in Australia receiving a shareholder resolution that got voted on at a company AGM. Now, just 2 years later, that's more than tripled. So we had 19 resolutions proposed this year. Not all of them made it all the way to the AGM. So what we're seeing is this year we've seen a lot more shareholder resolution activity. And what's really pleasing is we've seen like really, really high levels of support for voting in favour of resolutions at those AGMs as well. In fact, we're seeing support for resolutions almost double what we're seeing at a global level for shareholder resolutions. So that's been really pleasing to see. Some of the high points in that in the last 12 months, some of the resolutions around saving the Maugean skate from extinction that have gone to Woolworths and Coles, those resolutions have received 34%, 39% vote in favour. We saw a climate resolution to Macquarie Group proposed by Market Forces, which got 35% support. And even on non-nature issues, a resolution Six proposed to G8 Education earlier this year around providing paid parental leave to their staff got 29% support. So seeing really, really high levels of support for resolutions. In fact, if Australia had some of the similar rules to what companies operate in overseas, where if you get a vote of more than 20% for a resolution, the company is obliged to act, then we'd actually be seeing a lot of action coming as a result of these shareholder resolutions. And I guess the other thing I'd love to point out as a big win is that in Australia, it's also been not only rare for shareholder resolutions to be proposed, but for resolutions to be sort of negotiated for a win. That is, like they get withdrawn and not voted on at the AGM because the companies and the proposers have come to an agreement. And there's at least 4 examples of this I can see from this year, which is really amazing. So, a resolution 6 put to CSL around the risks of their gas use that got withdrawn, to Coles around deforestation that got withdrawn. Coles have a really great deforestation policy. Market Forces resolution to NAB around their climate financing disclosures, they withdrew that as well because NAB's got some pretty good policies they've introduced. So some really great results in Australia. On the flip side of that, overseas, we've seen a real drop in global support for shareholder resolutions. Not in the number of resolutions that are getting proposed. We're still seeing about 500 resolutions globally, of which about 300 plus have gone to a vote to AGMs. But the level of support for those resolutions has really dropped down to about 20% as the average level of support. So really, really down on previous years. And it really is part of that sort of ESG backlash that we're seeing overseas where, a lot of fund managers who might have previously supported these types of resolutions just don't want to be seen to be supporting them, even if maybe internally their views are in favour of some of the things being proposed. They just don't want to be seen to be supportive of these types of things.
So it definitely feels like the tale of two cities, where in New York, you're getting the full brunt of the ESG backlash and also the policy changes. that were so prominent this year versus, let's arguably say, Sydney or Melbourne, where you've had this amazing progress with the 19 shareholder resolutions. So, what is driving the mood or the sentiment or the pressures here in Australia versus in the US? And do you expect that to continue in the new year?
Yeah, I think one of the reasons why we're seeing such high levels of support in Australia compared to globally is because our superannuation funds hold such a large amount of
Right.
the shares in our largest companies. And I think those super funds have a strong connection to their members who are, regular people, people like you and I and everyone else who has a superannuation fund. And so I think those superannuation funds feel a lot of pressure from their member base to support shareholder resolutions that make sense, like on nature, on things like a livable wage, things like that. So I think that's one of the reasons why we're seeing such high levels of support here for some of our resolutions.
I know it's so good that everyone's looking at superannuation, not just a very robust form of retirement system, but it is giving us that extra weight to talk about long-term issues, whether it is climate change or nature risk. You mentioned coals earlier, but let's focus on nature risk. That's definitely been one of the trends for us, talking on the podcast about nature risk and biodiversity risk even. Compare Coles and Woolworths. What's been the story this year?
Yeah, and it's good. It's a good introduction as well because I think nature risk has really taken over from climate risk as being sort of one of those issues that's top of mind in terms of what companies are engaging on. And I guess in part because a lot of sort of climate risk reporting is being mandated now. So we're moving on to nature as the next thing. And what we're finding is that the two supermarkets are really in the spotlight. In fact, whenever we speak to NGOs about their corporate campaigning on nature, they always want to focus on Coles and Woolworths, which is interesting. We ask if they've got any other targets, but they always want to go for Coles and Woolworths first. And it's because Coles and Woolworths have such large footprints and such large influence over so many different types of markets. And the interesting thing about the supermarkets, whether it's on issues of ESG or issues of pricing or whatever it is, they usually like to work in lockstep with each other, which was our sort of experience of sort of negotiating and engaging with those two companies, Coles and Woolworths, last year. We found a really big difference this year. We've seen them really diverge when it comes to nature and how they're engaging with their stakeholders around nature. We've seen Coles go in one direction, which is, if I look at the issues we're engaging with them on and putting resolutions on, they got a huge vote to take action on saving the Maugean skate from their salmon supply last year. And we've actually seen a bit of action from them. So they reported on the impacts of salmon on the Maugean skate numbers. We saw them remove their sustainability labels from salmon sourced from Tasmania in response to, it no longer really being that sustainable. And they've actually reduced the amount of numbers of stock they get from some of the problem areas in Tasmania. We saw them do really well there. They also introduced a deforestation policy that classifies beef as a high-risk product because beef is one of Australia's sort of largest sources of deforestation. So we've seen them introduce a really great deforestation policy as well, which was enough for the Wilderness Society to not progress with their resolution that was going to get proposed to Coles this year. So we're seeing really great action from Coles. On the other hand, Woolworths, despite also getting a really, really large vote on the Save the Skate resolutions last year, which increased this year. It went from 30% last year to 34% this year. They're still taking zero action on Save the Skate. And on deforestation, we went from them having a really great net no deforestation commitment to actually walking back some of their commitments this year. And in fact, classifying beef as low risk for deforestation, which is why the Wilderness Society progressed to a resolution there this year. So we've seen them sort of Woolworths backtrack on a number of issues and Coles sort of taking a bit more of a leadership step instead. So it's kind of interesting because, usually those supermarkets are so close together in terms of everything they do. And now we're seeing a divergence. And interestingly enough, Woolworths has been the company out of the two that's more likely to be held in ESG and ethical investment portfolios. And I guess it'll be interesting to see whether that continues to be the case given their commitment to, things like nature action is not as good as what Coles is.
Well, I think that's definitely one that investors can bookmark in 2026. Are we going to see Woolworths continue on this divergent path, if you like, from Coles? And like you said, usually they're twinning in terms of the policies and everything that happens in this world. Now, you kind of mentioned it earlier as well, and it's to do with greenwashing, the labels. Are you really true to label? Are you really sustainable? What's been the highlight for you this year in terms of the debate around greenwashing?
Well, I think with greenwashing, one of the things I always look at is ASIC's crackdown on greenwashing. And obviously, every, month or two, we see new headlines about who was the latest company that's been fined under the greenwashing review. Often I find that a lot of the greenwashing crackdown to fines are as a result of maybe a marketing team not fully understanding the sustainability claims of their product. And maybe there's nothing particularly systemic about it. But I think we've seen also this year some examples of where it's just clearly really poor practice from a company in terms of what it's claiming to do on the label and what it's actually investing in. And I think the worst example I saw was around Prime Super, who were making claims about not investing in tobacco producers for a number of years, only to find that actually they had been investing in tobacco for a number of years, and they just haven't been disclosing it to their shareholders properly. And, it's not as if these companies were hidden in their portfolio. No, these are companies with names like British American Tobacco. they, they should really stand out on their portfolio holdings, even if you're holding them indirectly through other fund managers. So to me, I feel like this is an example of where people in that superannuation fund, I think, clearly saw those companies in their holdings list and chose not to act. So I feel like that was sort of one of the worst examples of sort of the greenwashing that's come out this year.
How about what are the winners? Are there any kind of sector in the market that flourished around this time that were being more alert about false information, misleading information around sustainability?
I'm not sure there's too many clear examples of winners, other than it's clear that greenwashing is something that a lot of funds are taking way more seriously now. And I think maybe sadly, what we're seeing is people withdrawing claims rather than promoting things that they're doing, just, from a risk perspective. So it's probably one of the unfortunate aspects of the asset crackdown is that, we've got that green hushing as much as we're seeing less greenwashing. Yeah.
Yes. Yeah, the green hushing. Now, we've talked about the big end of town. I'd like to know your thoughts on the small end of town, sustainability startups. Has it been a year for startups or not?
I think in particular the last few months, we've seen some really great results for some impact and sustainability and for-purpose profit startups that have come from equity crowdfunding. So Australia has always been a pretty tough place to do fundraising for any company. And I think it's even particularly so if you're a company that has impact or for-purpose or sustainability embedded into what your company does. But pleasingly, one of the avenues these companies are now seeing as a way to successfully raise capital is through equity crowdfunding. And I've really seen that sort of come back to life over the last few months. And there's been some really great raises in particular that I could highlight. We've seen Fremantle Seaweed and GoTerra both have 2 million plus raises through equity crowdfunding just recently. I was raising for 6 at the same time and did a very nice raise. And so did a company like Seabin as well. They raised almost $1 million as well. So all of these happening within the same month or two towards sort of the end of this year. To me, it's really pleasing because, we really do need to find more ways for sort of the next lot of sustainability and impact companies to get their funding. And I think equity crowdfunding is a great place for them to do it because, these are your stakeholders who get to be shareholders in the companies as well.
That's great to hear, and hopefully more of that in 2026. Speaking of which, we've talked about shareholder resolutions, nature risk, greenwashing. What are the things that'll keep you busy in the new year?
Yeah, so nature's going to really keep me busy in the new year. So I feel like nature as a risk is not going anywhere. I think we're actually going to lean a lot more heavily into it. And so for us in particular, we'll continue working on the Save the Skate campaign. I really hope that maybe next year we can move salmon farming out of Macquarie Harbour. I hope we're sort of getting closer to that outcome. But I think the deforestation campaigns we've been working on, with the Wilderness Society and the Australian Conservation Foundation. We didn't propose those resolutions that long before the filing deadline for the AGMs at the big banks and the big supermarkets. We got really good results from those initial proposals at the AGMs, and I think it's something we can really ramp up next year. And I think deforestation can be something where, we can get really good wins because companies only need to make a very, very small change, very, very tiny, meaningless impact to their financial bottom line, but a huge real-world impact if we can help prevent deforestation. So that's something we're going to lean more heavily into. And I'm really excited about some work that we're hopefully going to do on plastics as well. There's a huge plastics problem. I personally get really frightened about the amount of plastic waste that gets produced. And so I'm excited about some campaigns I think we're going to be launching early in the new year around plastics and then as some of Australia's largest plastic polluters. The other area I'd love to see SIX work on more, and also a whole bunch of other organisations work on more, which I'm seeing at a global level, is a focus on livable wages. So we've been in a cost of living crisis for a long time now. Times are tough, and inequality is growing. And so I think being able to look at ways to ensure that people are getting a livable wage from their work, I think is really, really important. So that's an area I'd love to see more work on. We don't currently have a campaign on it at the moment, but I guess if there's an NGO or advocacy group that's looking at this area and has some corporates in mind to do this work, we'd love to do that work with you.
Well, we hope this podcast reaches them. And that is certainly a great initiative to start because no one's really talking about livable wage, or we've talked a lot about the environment, the supply chain challenges. But what's really close to a lot of people from a practical point of view is, my goodness, how long are we going to be stressing out about our mortgages? How long are we going to be stressing out about our job security? So hopefully we will do a part 2 on this in the new year and help you get the word out. But once again, Adam, it's great to hear about your progress this year and looking forward to touching base in the new year.
Excellent. Thanks so much for having a chat.
Thanks, Adam. This is The Greener Way. I'm Michelle Baltazar. Thanks for listening.
The Greener Way podcast is a product of FS Sustainability. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional, legal, or tax advice. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.